Welcome back to today's report on Monday, the 6th of June, with me, Richard Perry, market analyst at Antec Markets, looking at sterling dollar now. And we've got, well, a lot of chop really in the last couple of days, or couple of sessions. You had that payrolls report on Friday, which obviously was very negative for the dollar. That induced a sterling rally, or cable rally. But subsequently to that, we've seen a couple of Brexit polls over the weekend, which point towards increasingly a possibility for a Leave campaign victory. So we had sterling sharply lower, and the Brexit polls are very much sort of driving sterling at the moment. So that's put sterling under pressure today. However, it has started to unwind some of that move. Perhaps the market thought it was a little bit overdone. Polls in isolation tend to be sort of taken with a bit of a pinch of salt sometimes, but obviously there is a bit of a fear that a couple of polls could turn into a trend. But still, there is these are just a couple of individual polls rather than the poll of polls. So we need to sort of to put it into a little bit of context, really. But the market is tending to sort of unwind some of this move now. So we saw the reaction on cable Sunday into Monday, strongly lower, and then just unwinding a little bit in the last couple of hours. So what are we seeing? Well, we're seeing very choppy moves, really. Generally speaking, I would say that the daily chart is now very much sort of range-bound choppy. You've lost the uptrend support. It's sort of taken into I think a possible pressure towards the 43.30 mark, and obviously the Brexit polls, if they continue to remain negative or remain pointing to the Leave campaign. I say negative, I shouldn't say that. If they remain sort of pointing towards an exit, shall we say, then that would be dragging on cable, because that would be bad for sterling. So subsequently, that would see a test of 43.30. It hasn't yet been seen. 43.50 was the overnight low before a rebound. Now, interestingly, we're seeing some near-term levels coming in. 44 figure, if I can get my crosshair, 44 figure was around about where we've seen a bit of support coming back into last week, bit of resistance over the sort of the early morning trade, and then you're through that. So you could easily see that as now supportive on a near-term basis. Subsequently, you've got a little bit of resistance up at 45 figure as well. Caught the reaction highs on the 31st and 1st, and subsequently a few lows as well. So I think that's a minor near-term pivot, but obviously your key levels are 43.50, which I can get my crosshair there, 43.50 and 45.80. So they're the levels to work with at the moment, but clearly the market is moving on Brexit polls, so you've got to stick close to the announcement of these polls and then go with the move, because it clearly is for now it's put the pressure onto the downside. But you could see tomorrow, maybe the next day, another poll coming out and saying that everything's still pointing towards a Remain victory, so the market would then turn around on that. So you need to be very aware of these polls, I think, at the moment, certainly in the run-up in the last sort of few weeks of the campaign towards the 23rd of June. But it certainly seems as though that the Brexit sort of fear is still driving and underperforming sterling. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.